Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 6th of November. All right, just coming into the MyFX Trading Hub, there's a little bit of a slight change, and we've been seeing this for some time, where the hourly trend sort of kicks around from down to up, and it's a little bit frustrating, if anything. But what we are seeing is the US dollar, well, the dollar index and dollar yen just cruising to the top side, sideways for dollar CAD and dollar Swiss. Now, when I don't see a matchup with these $4 pairs at the top, it tells me something is wrong, because when they go up, they should all go up at the same time. And at the same time, when the dollar's going up, all the other pairs should be going down. And we're not really seeing that at the moment. So to me, this dollar move is very fickle, right? The euro was the nicest, cleanest short-term trade. But Aussie and Kiwi still hanging on to slight gains, but they are sort of stalling. And sterling, with Brexit sort of hanging in the balance, it's doing its own thing. So to me, what have we got right now? Very short-term momentum, and the market is not confident getting aggressively into these positions. That's what we're sort of seeing at the moment. So normal liquidity, I should say, US dollar rallying, and obviously the same geopolitical events. Now, when you come into the upcoming major events, we do have the Bank of England today. So, what does that usually do for us? Well, a hell of a lot. At the moment with Brexit, it's been pretty much benched, okay, this whole time. The central bank can't really manage the economy when it doesn't know what deal they're going to do or no deal out of Brexit. So once again, you may see some volatility around this, but is it long-term, short-term? I don't think so. It's all to do with Brexit. So that doesn't really sort of come into play just at the moment. And you know what? And that's sort of tomorrow. So when we look at the overall picture at the moment, just having a look at the recent Kiwi data that came out, just a slight little blip of weakness in the employment rate and a slight drop off on jobs growth. But everything else was pretty much as expected. So what you see, okay, let me just bring it across to the charts. What you'll see, say on the Kiwi, you see a little blimp down and then no follow through. And that's pretty consistent with that sort of level of data. The Aussie now trading sideways. RBA left rates on hold yesterday. Sort of not as dovish as they have been, but you know what? It's still sort of there or thereabouts. There's the nice clean breakdown through that trend line around 111, sort of 15. And it looks to me like it's stalled. This is, once again, a nice clean break, but we're not getting the serious momentum. So I was just trying to get that out. And as you can see, this euro, I've blown the chart out a bit, but you can see where it's just sort of dangling away. And dollar CAD, pretty much oblivious to what's going on globally, but we are seeing oil starting to rally. So we may see a bit of downward pressure coming up. And dollar yen, the whole euphoria around a potential US-China trade deal, taking that safe haven trade off the table, and the dollar's higher. And that also comes back to when you look at the overall riding numbers, and this is where we come back to normal trading, right? And this is the part of the euro breakdown where that euro trade was so nice. We had the non-manufacturing numbers stronger than expected. That's enough to push it, give the US dollar short-term momentum. It drives the currency, or the euro, down through the trend line support, and that's where that move came from, right? That's normal market conditions. We haven't seen that for a while. So pretty good to see that come into play. And when you see euro come off, of course, the dollar index is going to rally. And we've seen that pop its head up back above sort of 97.70, back into the top side move. And still, you got to think this US-China deal is getting close or positive, because the dollar yuan is still dribbling lower. I think the overall riding picture, dollar yuan, if they come out with a US-China deal, I think we see like 10 cents to the downside, and then we see this thing rally anyway. Okay, I don't think China's out of the woods, regardless of a deal with the US. So that's pretty much it. The Bank of England coming out tomorrow. We do have some final PMI data out of Europe and Germany, as you can see there. But the rest of the numbers are pretty much not really there at the moment. Okay, so we just got to wait for the opportunities to build. And one of the key things, if you have missed this move here on euro, which I did, but Mark didn't, this one here, okay, that's over. right? Now you got to wait. Okay, we got to wait for the momentum and the opportunity to come back into play before you start throwing your dollars around. All right, and that's what all of this is about. It's about patience, vigilance, waiting for the opportunity to build, and then hitting it when it presents itself, not just sort of trading all over the place. And news-wise, trade deficit falls in September, blah, blah, blah. Some more stuff here about Donald's impeachment. US diplomat, funnily enough, comes back and says he knew about what Trump was doing. So that's going to lean against Trump as it goes forward. And you've got sterling stays range-bound on election uncertainty, Bank of England eyed, blah, blah, blah. Same old sort of dribble. I feel sorry for the news services, Reuters and Bloomberg. I mean, they've hardly had anything to write about. So they're rehashing stuff, flipping stories upside down, and sometimes it doesn't make a lot of sense. All right, guys, if it doesn't make sense, you don't trade. But that's what we've got at the moment. So stick to the plan, and it'll all work itself out. Cheerio.